What was the turning point? What were the things that you actually started looking into?
Then I finally met some good people online that started working dealing in fundamentals and created a system to.
But how you generally handle the losing streaks?
Back in the day, I'd lose a couple, 3 trades in a row. We tend to want to go strategy hopping, and that's the worst thing a person can do.
How fast was the transition from learning and courses and then going with actual accounts?
I opened up a small $2,000 account with it, and that was really where I started to cut my teeth.
What's your average winning percentage and your average risk reward?
It's increased my winning percentage from about 35% up to the last couple quarters has been around.
Welcome back to the Trading Map podcast, everyone, where we discuss market structure, risk management, the long game of trading, and practical ways developing traders can continue improving over time. Today, I'm joined by Tiger from Kansas, who has been trading Forex and Futures for more than 12 years while building a sustainable career in the markets. In this conversation, we explore his trading strategies, market analysis, and approach to risk management. We also discuss the lessons he has learned throughout his journey, his views on trading indices, how he adapts to changing market conditions, and why his approach is built around a combination of fundamentals, sentiments, and technical analysis. If you have your iPad or notebook nearby, this is a great opportunity to jot down a few key takeaways. Let's get right into the conversation. Great. Hey, Tiger, thank you so much for taking the time and jumping on. It will be great to delve into your world, but let's start with your introduction first. Of course, I was checking out your experience as well before connecting. I think it's a long time since you have been into the markets, and we can get into that. And I think Forex is one of the areas where you have been operating, and maybe a bit of stock. So we'll learn a bit more about that as well. But maybe just start with a quick intro.
Quick intro. Well, yeah, I mean, back in the day, about 12 and a half, about 13 years ago, I watched this movie called The Wolf of Wall Street. Everybody's heard of that at this point. So
Yeah, yeah.
that was really my first introduction into this thing called trading. I'm like, what the heck is this? I've always heard of, trading and investing in stock markets, but never knew anything about it. And so the whole thing just really appealed to me outside of the illegal stuff, of course, the drugs and all that. but
It's crazy.
but yeah, when it came to the trading side of things, I just thought, well, shoot, the pink sheets and the OTC stocks and things of that nature seemed kind of interesting. So I just wanted to dig a little deeper into it. And from there, I ended up taking a stocks trading class, followed up by a Forex trading class. That was 2014, 2015 with Online Trading Academy. They had a branch of it here in Kansas City area at the time, I think 40 worldwide locations. But yeah, that was really the start of it, and just kind of learning the basics of trading. And from there, it's all about learning the nuances. And that's what happens when we finish the classes. We get out and we go do it ourselves and start burning our fingers on the stove and figure out what works and what doesn't work. So 12 and a half years later, still kicking.
Mm-hmm. Great, and that's like a lot of introduction there with Wolf of Wall Street.
Yeah.
I'm sure you didn't check the aerotime dynamics. That's the
Right.
I think that's that he's selling to that guy, like some space technology, aerotime dynamics. It's good,
Right.
But that's really cool. And so 12 and a half years. You started with Forex though, like that was your main
Yeah.
area, and it's kind of very interesting. And I just want to see. So you took like for how long you kind of studied and then actually entered into trading. Just want to see that, and especially it will be good for like a couple of new traders as well to just really see the transition, then how much time it requires, and how difficult it is, and all of those areas. But generally, how fast was the transition from learning and courses and then going with actual accounts, actual money?
Yeah, yeah. Well, the curriculums themselves were a week long a piece, and they had a
Okay.
program to where you could take free lifetime retakes. So, 2014, I took the stocks in January. I retook it in July, and then
Mm.
at that point, when it comes to the stock side of things, I started to realize, oh wait, I don't have $25,000 to start an account because that was the minimums back in the day, and so I did a little digging and found out that at the time, Forex, I could start off with a $2,000 account. So, and
Mm-hmm.
things by now are obviously way easier to get into trading with smaller accounts. But back then, it was a lot stricter. And so, in January of 2015, that's when I took Forex class. And then I retook it in July again because of the free lifetime retakes. And then I opened up a small $2,000 account with it, and that was really where I started to cut my teeth because, when it comes to the classes I took, the way they kind of marketed it is, hey, this is going to push you ahead about 2 to 3 years just because of everything they're
Mm-hmm.
cramming into our brains at the times. And
Got it. Uh-huh.
so not the end all be all, but just a great start essentially. And then we just got to go figure it out from there. And yeah, I mean, I messed around for several years with that same
Very
account
cool.
and didn't grow it, but I didn't shrink it either. I just kind of stayed break even based off
Mm-hmm.
just of technical analysis alone. And I kind of got started with supply and demand zone trading.
Uh-huh.
And then several years later, I finally started digging into the fundamentals, the reports that we get every day on the economic calendar, the COT reports on the sentiment side, and really started to piece together an actual plan rather than just looking at a chart, all the sexy colors and lines.
Right, right.
But what I figured out finally after many years of trial and error was, hey, it's all about the fundamentals. Sprinkle in the geopolitics whenever they arise, kind of like we have now with Iran and U.S. and a little bit of Russia,
Yeah,
Ukraine to an
yeah.
extent. And so,
Yep.
so yeah, I just finally started to realize, hey, that's the why to get into a trade is based off the data. Now let's look at the money, the smart money, dumb money relationship, as far as like the COT report, retail sentiment, and see if that confirms what the fundamentals are saying. And then if and only if, that's when I have permission to go look at a chart to actually time the trade. And so when I finally got to that point, the wins started getting a lot more frequent, the losses much smaller, and I had a system at that point. So it just took me many years of toil to get to the point of saying, hey, I'm actually a trader now. I'm not just a wannabe.
I mean, that's pretty cool. And this transition is also very interesting. I mean, especially in your case. So you had your $2,000 account there. So you just mentioned like you didn't blow it up right away.
Right.
So that's very interesting because that's not usually the case.
Right, right.
Actually transitioning from learning to actual trading. So you were you like risk averse from day one, or you
Well,
just had like, hey, I don't want to lose the money no matter what, and I have to be careful here. Like,
yeah.
what was the
Well, if the most important thing that they taught us at the academy was risk management. So they just
okay.
beat it into our heads about the risk and
Mm,
maintaining a 3-to-1 reward risk ratio and not moving your stop loss, taking a break when you have a loss or two in a row. Like that's probably the most important thing I gained out of that was the risk reward management outside of the actual skeleton of the technicals, which is the supply and demand zone trading. And so, again, just from technical analysis alone plus risk management, that's what helped me survive. Was really those two things. And so, it sucks to lose a trade, especially new when you're a newer trader. So, but I placed a lot of trades. I had losses like everybody else, but I just didn't have enough winners to make up for the losses. So it was just a very, very, very slow decline on the account before I finally,
mhm.
again, started getting into the fundamentals and sentiment to kind of turn things around.
Great, and we'll definitely delve into like your strategy. Feels like a very interesting approach. You are kind of like putting the technicals as like on the secondary and fundamentals first, which I think makes a lot of sense. Just today only, I think this idea and this method and this system worked in Broadcom. In AVGO, we took a trade just a while ago, and they had a deal yesterday with Apple, $30 billion deal, and great gap up first and then came in really strong areas and structures. And so we kind of like took the dip and skyrocketed again, almost like 8, 9x kind of trade just this afternoon only.
Nice.
But yeah, so I think I will align on that front. Just like just looking at the beautiful, colorful charts is just not going to cut it, and
Right.
it's very important to get a broader grasp of what is going around. For example, yesterday we took three trades. One was in gold, so we shorted
Hmm.
gold. Went long in crude because we had a news over, just over the just day before that, even overnight,
Hmm.
that we're taking the the Iran deal, it's going to get over, and then things are going to get better. And crude was reacting according to that. So that was another trade as well we took. So I mean, it's really great. Like when you really get that broader overview of the fundamentals and then the risk management and then so the technicals. And I think you really use the right word here, which is like timing the trade, because you still need something, like you need numbers and structures and your risk rewards and all of that. You really time the trade, and,
It's a
and
big
that's where I
puzzle.
think.
Yeah, it's one giant puzzle.
Mhm.
It's no
Right.
one thing by itself is the end all be all. It's just as the markets are interconnected, the worldwide markets, so is the system. I mean, if you miss out
Right.
on any one piece, the whole house of cards can fall.
Definitely. And I think we are going to be limited here on time as well, Tiger. I really want to get as much as possible out
Sure.
of it. So let's discuss a bit about like your turning point in your trading. So
Mhm.
you learned, open up the account, profits and losses, maybe break even, maybe bit of profits here and there. What was the turning point? What were the things that you actually started looking into and started delving and really started to see a big change coming?
Mhm.
And which year was it? Like how many
Yeah.
years of that struggle you went through? Yeah.
Yeah, well, I mean, that initial $2,000 account I mentioned, I finally got to a point where I did end up blowing it because but it lasted, kind of like what you said at the outset. Normally you blow your accounts pretty quick, but just because of the reward risk management, just because of the simple supply and demand, it lasted a long time. And so, yeah, I finally got annoyed with it at one point. I kind of went through a divorce. And so I was in a very like low period of my life, and I just like sold the farm. I'm like, screw it. And so I finally was able to successfully kill the account. But
Mm,
shortly after, I just got, and that was about 2017, 2016, 2017 area. So right after that, I just kind of picked myself up and dusted myself off and dug back into some books on psychology and just kind of rebuild myself as a person, as a man, essentially. And I started to get serious again with the trading, and then I finally met some good people online that started working and dealing in fundamentals, and kind of
mm,
created a system to keep all the data uh, real simple to read, like in a one pager, to where I'm not having to search from website to website for the GDP, for the PMIs, for the retail sales. Not
mm,
just the economic calendars, but really a system to put all the data together into one spot, to where at a glance you can see, hey, is this fundamentally and sentimentally worth even looking at on a chart? And so
mm.
that right there was really what kind of where the turning point was, where I stopped wasting 2-3 hours a day doing all that, and I had a simple system to put it all in front of me, so I could then just focus on the charts at that point. After I see, hey, I've got a bullish bias here, I've got a bearish bias there. Great. Now let's go see if we can time it on a chart. So the simplifying the system was really the turning point for me, rather than being so scatterbrained.
Mm. Great, great. And so it's almost like 3 to 4 years of transition though there. Like it's
Took a long time.
still
Yeah.
yeah, it's still a long time and good amount of work. And generally, I mean, actually becoming a like really successful or consistent trader. I mean, it took me 11 years, honestly. This is
Yeah.
really crazy
Exactly.
stuff.
It's different for
I
everybody.
started around the same time. So you mentioned like, 2014 January. I started around April of 2014, and I was just coming out of the school and just entered right into it. Especially the summer break between going to the college and just the time in between, I did like 2 3 different courses. Just really fast. Let's get it down. But it doesn't work that way.
Correct.
I've blown up too many accounts. Honestly, I was more aggressive
Yeah.
and lot of family's money
Well,
as well.
but that's where you learn the best lessons, is when you lose money. I mean, it's nice to make winners up front, but when you make the losers, hey, it's just like touching the hot stove as as a toddler. You never forget.
And you don't want to touch it again. Yeah, you don't want to touch it again. Even today, even if it's one of the best structures and setup, and you know that it's the, really the A grade setup that we are going to trade. And if I see that it's hitting the risk threshold, I don't care.
Yeah.
If it's going to turn around just after taking out the stove or
Yeah.
whatever.
We've calloused our
So
fingers. Yeah. Yeah. To where
mhm.
a small loss here and there, it doesn't hurt as bad.
Definitely. So let's delve into like kind of your approach now. are you focusing on more on the stocks or forex,
Yeah.
or and maybe just a bit of like maybe an example trade also that you recently took, or
Mhm.
just like better understanding of what kind of systems exist out there and what different traders are implementing. So it will be just curious about your
Yeah, well, I
structure.
focus mostly on currencies, gold, silver, Bitcoin, the indices, U.S. indices, a little bit of FTSE, the UK 100, um,
Uh-huh.
a little bit of Nikkei here and there. Yeah, I would say that's, and then oil. Oil is probably my newest addition. So I've been really kind
Mm.
of focused on that a lot more as well. As far as stocks go, I haven't really focused on them a lot, not of late. Again, whenever I started digging into FX, I just fell in love with it because, hey, we've got 8 major currencies, only about
Yep.
28 combinations, so it's just a lot easier. From what I figured out, it's a lot more easier
Mm.
to learn the behaviors of 28 pairs as opposed to what are we up to, 17, 18,000 stocks or something like that.
Right.
So yeah, I just kind of learned the nuances and the behaviors of the currency pairs, and I just got comfortable with it. So then I just slowly added on a few other things: gold, silver, like I said, indices, and the Bitcoin. After I fought Bitcoin forever because it was just so crazy, and then I would
Crazy,
always
crazy.
say, Himanshu, I would always say Bitcoin, if it ever starts behaving like a fiat currency, then maybe I'll start trading it. And finally, it started to do that.
Uh-huh.
So I've kind of started trading
Mm.
Bitcoin to some decent success, and then yeah, and then oil
Uh-huh.
again was the most recent addition. So that's mainly what I
Mm.
focus on. But you asked about my strategy. I mean, that's basically where it starts. I just take a look in the mornings at the. I want to see what the average retail trader is seeing as far as headlines. So Yahoo
Okay.
Finance is a great place for it.
Mm.
Because a lot of times, whether people believe it or not, the banks, certain financial figures, they like to put out news pieces to essentially trick. This may be a hot topic, but to essentially
And we have seen both of things. Yeah.
trick retail
Mm.
traders into going doing this, doing that, kind of like the Jim Cramer effect, and knowing that
Believing in one idea and just putting that information out there and just kind of playing
right,
against it. I mean, and that's how like most of the systems are set up, Tiger. Like,
sure,
if you
sure,
just
sure.
really, if you're not smart enough, that's how most of the systems are set up. And
So yeah,
mhm.
but that's where it starts. Hey, where's the and of course I didn't invent the term, but where's the dumb money looking, right? Where are they likely to
Yeah.
get positioned? Because wherever they're going to get positioned, we know where their stop losses essentially in a roundabout way on a chart may lie. And so, I try to trade like a bank. I think like a bank. I don't want to trade like a retail trader, the herd mentality,
Mm.
since
Understood.
70-80% of traders lose money. So, the smart money is called smart money for a reason. They know where those liquidity pockets are. They have to have a lot of money, a lot of orders to
Mhm.
fuel their orders to take the opposite side. So that's essentially where it starts. Is the again the headlines, and then we start looking at the economic calendar to see what's on deck for today and the rest of the week. To see, kind of compare and contrast those reports to the currencies I trade. Is this report, whether it meets expectation, misses, or beats expectation? Is it going to be different from the previous report? So I've got, again, that's part of the algorithm I have that kind of keeps all that info together for me. But geopolitics, world news, the fundamentals, and then I match that up with the sentiment. So the COT report. Hey, is the big banks and
Mm.
institutions, are they on the side of bullish gold, like you mentioned earlier, or bearish gold?
Correct.
Is the retail sentiment on the dumb money side, the put to call ratios, the AAII investor surveys, the general options
Mhm.
flows, are they going the opposite way of the smart money? If so, great. That's the sign I want to see. I want to see them on different sides,
Mm.
and then again, that's kind of the formation, the formula that I have
Mm.
before I'll ultimately go into the chart and seeing if I can find a supply or demand zone to bounce it off on the tech.
Really cool. Tiger, can we please like take an example of just one of your recent trades? Because I think like that will,
Sure.
give us like really better structure. Just any of your
Yeah.
like last 1 week, so just one trade that you have taken,
Mhm.
and what were the things you are looking at?
Yeah, so pound dollar, that was probably one of my more recent trades. I had a
Okay.
bearish bias towards that because, again, the dollar was really strong. The dollar had a 100% beat rate as of last Monday, I believe it was, as far as high impact red folder events on the economic calendar. It had literally exceeded about three quarters of them. And then the other quarter that was not a beat was a met expectation. It met expectations perfectly as far as the economist forecast. So I looked at that as dollar strength, obviously, and then the British pound at that time was showing weaker. It was missing a lot of expectations. So with that in mind and having the smart money, dumb money relationship on my side, that's when I set out to go find a supply zone to short in. So, for me, when I'm looking for supply zones, I'm trying to find just a small collection of candles, a basing structure, and I want to see from that basing structure, I want to see price gap down really hard. That shows that supply heavily exceeded demand in that particular basing structure. When price returns, if price returns, then the banks likely didn't get to fill their orders on that first basing structure. That's why it gapped in the first place. It gapped too fast. And so, with smart money, with big banks, institutions, finance banks, hedge funds, pension funds,
Yeah.
they're trading way more money than you and I put together times 100. So perhaps they
Yeah.
put in a big order, but only part of it filled. And so the whole idea is, if price returns, they likely would want to fill the rest of their order. So I took advantage of that a little bit earlier this month. I think that was back on, when was that? I think that was back about mid-June, I guess, for that particular trade. So I ended up bouncing into that supply zone, which is higher on the curve. And then I pick a demand zone at the bottom to take my profits so that it doesn't
Yeah.
catch price and turn it back around. So it was a pretty good winner on that short.
Very interesting, and it's really great to learn kind of structure that you're implementing. On an average, are you like more of like the intraday trader, more of like the positional, or on an average, how many trades you're taking in a week? Because these numbers are very interesting to
Sure.
traders all over the world. Which is, second is like, what's your average winning percentage and your average risk reward?
Yeah, well, I would call myself a short-term swing trader, so I'm typically in trades anywhere from 2 to 5 days. In the past, it was more up to a week to even 2 weeks, but with the bombings on the nuclear sites in Iran this past fall, it kind of scared me out of holding open positions over the weekend, just because I didn't
Makes
want
sense.
I didn't want price to gap me 100 pips or 150 pips the other way,
1,000%.
give me a
Yeah.
stupid loss. And so at that time, I was in a trade, and those bombs came in on a Saturday. Well, luckily, when the market opened on Sunday, price gapped in my favor. So I ended up making a winner out of it. But I'm the kind of person, I look at what could have went wrong. And so I'm like, well, if that would have gapped the other way, I would have had just an ugly loss. And so
Yeah.
even though that worked in my favor, I just told myself, hey, while this war is going on, I'm going to try my best to open all my trades on a Sunday night here in the U.S. or Monday or even Tuesday, and try to have them
Yeah.
closed by the end of Friday, by the end of the intraday session. So that's been kind of the way I've been working it lately, just because of the geopolitics of it. And yeah, and it's been doing wonderful. I mean, it's kind of made me sharper on my trades. As far as reward risk, they taught us 3-to-1 reward risk minimum, and so that's something that I've kind of used most of my trading career. But I will tell you, earlier this year, I got to a point where I started kind of reviewing some of my trades a little more thorough, and I found that a lot of the times when I did have losses, I was only getting stopped out by a few pips, only for it to go in my favor to the would-be target. And so I've actually gotten a little more lenient on that, to where as long as it's a 2-to-1, I'll take the trade. Like, I'll just look, instead of going for home runs all the time like I used to do, I'm just going for those singles, those base hits, those doubles. And you asked about winning percentage. It's increased my winning percentage from about 35% up to the last couple quarters has been around 65%. So it's just done wonders for me as far as the winning percentage. And I'm actually happy with it. Like, I never thought I would drop down to the 2-to-1 reward risk, but I absolutely love it now, because it makes it a little bit easier to sleep at night knowing, hey, I'm not trying to swing for the fences.
Yeah, yeah.
I'm just going for
Mhm.
that base hit or going for that double, and I'm happy with that.
And you have been like risk averse from day one, the way you started also. And these are personality kind of like personality types as well. There are people
Yes.
who are comfortable in more hits and bigger profits.
Yeah.
And both of these kind of like these areas, they go hand in hand and like just almost directly proportional to each other.
Yeah.
Let's say if you try to go on in fact, sorry, inversely proportional. If you try to go, let's say, higher on the risk reward side, then your risk reward and your winning percentage will go down actually,
Yeah, it's a
right?
numbers game. Well, I was just gonna say, and we all have our own personalities. So what works for me may not work for
Right.
you. What works for you may not work for the viewers on the channel. It's
I think we are in the same bracket, honestly, Tyler,
yeah, yeah.
because
The-
it's difficult to take five, stops in a row. It just gets really difficult. So I also prefer the same, just like, even taking just 50 to 60% of the position off,
mm,
towards the high of the day. And if there are certain liquidity areas, the main areas, main targets that we are going for, then we'll just leave some position open. This morning we almost got killed in Texas Instruments. So there was great news yesterday. I forgot the headlines. Great positive news. So great structures on the longer time frames. Opened up, gap up, took a dip, we bought it, almost went up to like 2x in the profit. And we were aware that if we don't get out here, we will end up making like maybe zero point 0.6 x,
yeah,
half x,
yeah. Well, look,
0.5x.
no, I mean, again, like I have a friend in Mexico, and he does 1-to-1. He just goes for 1-to-1 reward risk all the time, and he does great.
Mm,
Like I don't, I think it's crazy because I'm like, well, this thing's got to pay me before I get up into that trade. This guy's going for 1-to-1s and he's got a 60, 70, 80% winning percentage. So it's, again, it just depends on if you want your percentage higher just to make you feel
yes.
better. Because look, some of this is cerebral. Some people can't take winning 33% of the time and still making those 5-to-1s and 6-to-1s. Yeah, it's a weird numbers game, and everybody's got to find what flows the best for them. That's about the best way to describe it.
Definitely. One of the interesting areas, let's discuss a bit about the losing streaks and how you are handling those. I'm sure like one of the answers can be that you have been trading now for a while. So you have seen the game,
Yeah.
played the game for a long time. But any kind of structures, mental structures, or any internal talk
Hmm.
that you say to yourself that, hey, this is just the cost of
Yeah.
doing this business. But how you generally handle you even cut down on your position sizing a bit when you have a bit of losing streak, but how are you handling that?
Yeah. Well, I mean, it's a lot easier now than it used to be because back in the day, I'd lose a couple, three trades in a row, and we tend to, especially when we're newer into the game, we tend to want to go strategy hopping. And that's the worst thing a person could do. Like early on, yes, go out and try a few things. Go test drive a few cars before you figure out what you want to buy and drive. But once you finally
Mhm.
find something that works, and you start going into those losing streaks, then it sounds boring and it sounds cliche, but that's where we need to have a trade journal to write down our losses because our losses will tell us what we're doing wrong. Like on mine, whenever I win a trade or I lose that trade, in my notes, I'm showing, hey, did I pass my rules? Did I obey all my rules?
Yeah.
And for me, whenever I would have those losing streaks, I finally realized after a while, Himanshu, that it wasn't even my system. It was the fact that I was choking my stop losses too hard. So I was
Mm.
just barely giving it a little clearance on the other side of my zone, the zone I was trading from, whether supply or demand. So that right there is what helped me to change going from 3-to-1 to 2-to-1. So I got to be honest, I haven't really run into a whole lot of losing streaks since. But whenever I do lose, I realize, oh wait, I skipped that. I skipped that moving average bounce. I skipped my RSI going into extreme territory, or there were too many candles in that demand zone because I'll go back and I'll look at the chart. Or hey, the gap wasn't the greatest. I didn't have enough volume leaving on the leg out. Like it's usually a little thing
Got it.
like that that I just skip over, and then I'm like,
Mm.
okay, it's not the system. It's just me. I'm stupid. I wasn't paying attention to my rules, or I ignored it. So
Yeah, skipping the areas and like really the rules, that you have put together.
yeah,
I think I'll agree with that as well. Just very recent experience, 2 days ago in Alphabet. It hit its target and it's very clearly written in the rules. We even have checklists.
yeah.
We'll go through the check before entering a trade. didn't do the checklist, hit it its target, then we are buying on the dip. When the trade is done already, what's the point? But it's just I think you hit it really well here. In fact, I was just thinking about it last night only, that hey, let's journal every single piece, even though strategy is really strong here. Let's still journal it and refine it, and that is, I think, the actual work as a trader. That is the only thing, and the actual work going in becoming a better trader
Yeah.
is really having observations down in one place.
Yeah. Some of the best traders in the world, as silly as this sounds, are airplane pilots. Why is that? What do they have to
Mhm.
do before they fly a plane every single time?
The checklist.
They have a
Yeah.
checklist.
Even. Yeah.
If there's an issue with the aileron, they can't fly. So we have to imagine, hey, are the wheels good? Is the ailerons looking? Are all the lights working? Are the pressure gauges good? If so, great, I can fly this plane. So that should be no different in our trading rules that we set off, that we set these rules for ourselves. So why would we break our own rules? As far as frequency, because that this will kind of piggyback onto that, I'm lucky to get one, maybe two good setups a week as a
Mm-hmm.
short-term swing trader. So I'm patient. Most people aren't. There's scalpers, there's short-term intraday traders on a 5-minute, 15-minute chart. They're more about the action. But if you're about the action, go play a slot machine. At least you got prettier colors and lights to watch. When it comes to trading, we're here to make money. We're not here for entertainment. So I'm comfortable with one setup a week. I'm a sniper. But yeah, at the end of the day, we got to go down our checklist and follow our own rules that we set for ourselves. So think of it like that for the viewers out there. Okay, an airplane pilot's not going to fly that plane if one little thing is off. So it should be the same in our trading.
Agree. And even under pressure, I mean, trading just never works out. It's just the hard reality. Until unless you don't give it room, and you're smart and sharp, and you have everything in place. I mean, in person and in work, in business, there's better chance of creating some success. If it is some external pressure, it's already not gonna work out. That's my personal. I'm just sharing my personal experience
Yeah.
on that front, and it's important to have a bit of something outside, of the trading. Otherwise, staying
Yeah.
locked up in a room, which I have done for a couple of years, it's just really not good
Yeah.
for even for the mental health as well.
Yeah, well, and it has to match your lifestyle. I mean, if you're sitting on a pile of money and you're just trading just to have something to do, okay, I get it. Maybe you play around with the scalp and the short-term swing traders. But for most people, like I imagine Himanshu, myself, everybody I've worked with, we all have side projects or a job, whatever the case is. So, I love the fact I can set an alert on all my currency pairs, gold or whatever it is I'm watching that week, go about my business, build my content. I do a couple live streams as well, and then just wait to hear those alerts. That way I could take a minute and look at that, say, okay, or like, again, there's my checklist. Is everything checked off of my checklist? Great. Place a buy sell order, and then I'm done with it. Just set it, forget it. I get back to my work. So it's different for everybody. Not everybody has the patience. Some people have too much patience, right? And I'm kind of one of those people. I just kind of fall into I'm patient. I've got things to work on. I'll place the trades when they scream at me. Like I try to look at it like I'm a retired trader. Okay. And I say that meaning it's kind of a mind trick for myself, meaning, hey, unless everything's perfect, unless it's a grade A setup, I just don't touch it. So I'm quite comfortable going a couple weeks without a trade. I do that from time to time, 2 weeks, 3 weeks. But yeah, on average, it's about once a week, usually about for me. Find that one good grade A setup a week.
Great, great. Yeah, and I think it makes a lot of sense. Retired trader, I think you want to let the opportunity fall into your lap,
Yeah.
and the conditions you're waiting for, instead of just trying to find some money. And it's just really not good. And I think you align, and I also align with that. But so I think we are on the timelines here. Tiger, just will close it up. One piece of advice, really something that made a lot of difference in your life, in your trading in general, for the early stage traders. That hey, this is one thing that you should be doing all the time to improve and get better.
Yeah.
What is that one thing that you would like to point out?
Well, back in the day when I was still fairly young, we had this thing called MySpace. And I think most people are probably too young to remember that, but I remember there was a section on there saying, "What books do you read?" And I remember putting on that section, books, who reads? So I used to think it was the most boring, stupid thing ever until I finally started reading. So for me, trying to find my way out of high school and figuring out what the heck I want to do with my life, I started digging into some books because of a mentor I had, and just getting into some regular books on people, books on winning, books on psychology, books on sales, okay, and some other stuff. So I kind of got my start off of reading books. So I know that's not the most glamorous thing to hear, especially if you're newer or younger out there. But that's really what set me off on my journey, was figuring out who I was and understanding the way the world works, the way life works, the way business works, the way money flows as far as finances. And then, that was really the roots that helped me to start taking off into whatever it was I was wanting to do after that. So it helped me get into trading and stay persistent and, learn that it's okay to screw up and make mistakes. But at the end of the day, it doesn't define us. So we just got to keep it chugging along and make sure whatever you do, you're passionate about. That's the most important thing. And I just finally found a passion for trading, and that's when I realized it was a good marriage. So yeah, get your psychology right, get your brain right, your thinking right, and then make sure you're passionate about whatever it is you're after, whether it's trading or anything else. Got to be passionate about it.
Definitely. So really, educating yourself and having that passion and really driving through the failures. I think that, and especially in trading, driving through the failures is, I think, equally important as well in the early years. So I think that's again great piece of advice there. A lot of great insights, Tiger. I think we can do way more longer than this. I mean, we haven't touched the surface here in this conversation. But I was just trying to put a good piece together for the podcast. But really appreciate the time here, and thank you so much for jumping on. And just very last thing, where can traders find you? They have any questions they want to learn? Where they can find you? If you want to maybe share your Instagram, LinkedIn.
Yeah, so a couple places. As far as the live streams I do some work with FX Empire. That's my primary role. So I do a live stream on there every morning. I also make some shorts. I do some posts for their social media. And then on the other side, I work with A1 Trading. So for you guys that know Trader Nick on YouTube and all the socials as well, Trader Nick, that's another person, another business I do a 30-minute segment for every day. So I do 2 live streams daily, usually in the mornings. And then as far as my personal socials, you can find me at Trade Like a Tiger on all the socials. Real simple. Yep.
At Trade Like a Tiger, right? That's right. Got it. Great, Tiger. We'll make sure to leave your handles in the show notes as well. Thank you so much for your time again. Great connecting with you. If we get some time again, more than happy to have another conversation or another opportunity. But again, great conversation.
Yeah, absolutely. Just let me know.
Thank you so much.
All right, appreciate it.
And that brings us to the end of today's episode, everyone. Before we sign off, I would like to give a quick thank to the sponsor of the Trading Map podcast, Bull Street Edge. Bull Street Edge is a trading technology company built for traders who are committed to improving their trading process, performance, and decision making in today's markets. Their platform offers a suite of powerful tools, including Trading Journal, AI Trading Coach, advanced charting tools, research watch lists, and access to a growing community of traders. If you're serious about becoming more structured, disciplined, and consistent in your trading, be sure to check them out. You'll find their link in the show notes below. If you enjoyed today's episode, don't forget to like and subscribe and share with the fellow traders who are committed to improving their craft and trying to bring consistency in their trading process. I'll continue bringing on more experienced and quality guests onto our podcast to share practical knowledge, real experiences, and valuable perspectives that can help you make smarter trading decisions. Again, thanks for listening, and I'll see you in the next episode. Until then, stay disciplined, stay focused, and be great.